what we saw last week with the talks and the actual implementation and us hitting every single well, I can't say that with confidence, but us hitting a lot of tariffs with a lot of different countries, we saw the shift in the market immediately. You had pairs that moved 300 pips in 4 hours. You had pairs that moved 500 pips. You know, you had odd USD. I think that thing moved or that was odd CAD that moved like 437 pips. Normally those pairs don't move like that. We have not seen this type of action, price action, since March of 2020. Hey y'all, I'm back. I took a little bit of time off after my birthday just to rest and recoup. Work was extremely busy. That is the 9 to 5. And I just kind of kept up with the coaching group and trading on my own. And that was it. I took a little bit of a break from making content. But today I want to take the introductory video that I did a couple years back about Forex. I want to take it to the next step with you guys. Okay, so 2 years ago, I think it was, I did a video that was very introductory, right? So for people who had never heard of Forex, who wanted to learn more and understand how the markets worked and what all these different things meant, we have a video for that. But this video, I'm sorry, my neck is itching. But this video, I want to take it a step further. Now, I've always said that I've never been one big into fundamentals, but that changed. That changed because I understood that while I had the technicals down, I needed to understand the bigger picture and what was going on in the geopolitical world, right? So macroeconomics, in order to really have an edge in the market and to be able to understand what was happening and to be able to take trades with confidence. So today in this video, I'm going to explain to you a little bit of what we saw last week. So market sentiment is what we're going to be discussing today. We're going to talk about what a risk on market is and what a risk off market is. It makes me think of wax on, wax off. I don't know why, but it does. So I want to deep dive into these theories and concepts with you, and then actually show you how the markets reacted to some risk off news that we got last week. So let's stay tuned. Grab a pen and paper, right? Grab your pen, grab your paper. You're going to want to take notes. And if this does not immediately make sense to you, that's absolutely fine. It has taken me, I would say, at least 6 years. I'm 8 years into this. It took me 6 years to even start paying attention to the news. Like, I don't really need that. No, it's just extra. It's complicated. It's something else difficult to learn. No. When I started paying attention to what was happening in the financial markets, I started paying attention to what was happening on the political arena, right? Not just with the U.S., but with other countries. Then it started to make sense to me. And I'm like, oh, this is the extra edge that I need in order to make sure that I can execute these trades with confidence. So stay tuned, grab your pen and paper, and let's get down to it. All right, to start off, we're just going to talk about what risk on and risk off means. In a risk on market, investors have confidence in what's happening. They're more inclined to take riskier positions and invest their money in riskier things because they're confident in what's happening in the economy. That's not what we saw last week. Last week, with the implementation of U.S. tariffs with virtually every single country, we saw what happens in a risk-off market. Investors get scared. They have fear. They're worried. And so they take their money out of those riskier assets and they begin to put them in what we call safe haven currencies. And so we're going to break down what safe haven currencies are and what are more riskier, or what are considered more riskier assets. So now those safe haven currencies are going to be the US dollar. It's going to be the Swissy. It's going to be the yen, and then it will also be gold. Your more riskier currencies are going to be the Aussie dollar, the New Zealand dollar, the Canadian dollar, and then crypto. And so if you go through your charts, and I'll pull up a couple examples so you can see, all last week, several of the pairs that I had marked up and executed small positions on, right? CHF, it moves slow as paint until we have a risk off market situation. On CHF, that thing dropped. NZD CHF, that thing dropped. USD JPY dropped. All USD is really where we saw it at, right? And the reason that happened was because AUD is a commodity currency. The Australian dollar is a commodity currency. Y'all got it? The Australian dollar is a commodity currency. And what that means is that when global trade is flowing or thriving, the Australian dollar is strong. When we got news of the tariffs, it began to weaken, right? And so when we're talking about that with major players like the United States, China, it's bad news for the Australian dollar. That thing got weak. It got weak. And I will pull up a chart and show you right here. Aussie versus the US dollar. If you was in a sale, you made some good money last week. And so that's the whole thing about being able to trade Forex. And I like to tell people all the time, Forex is not a scam. It is not a scam at all. If you know how to position yourself in the market, you're attuned to what's going on, then you can position yourself to earn some real good money. I have to tell y'all, I wasn't a buy for AUD USD, but I think I closed out Thursday morning. And then I started looking for sales, not only on that, but also on Euro USD as well. So I think that we are in for a wild ride this year. And as much as my opinion that does not matter about the current president, as much as he may irritate me, he creates a volatility in the market that is good for people like you and me who trade. Right? So now it's just mastering and understanding this risk on, risk off sentiment. So let's get back to the education. So let's talk a little bit about what drives the shift in the market from either risk on to risk off or risk off to risk on. A lot of times you will see it in the charts when you get signals that a change is about to happen. But if you have this information ahead of time, you can confidently execute a trade. So typically we see things like this happen when there are black swan events. So like what happened in March of 2020. I'm not going to say it here, but what happened in March of 2020, or a natural disaster, or if unexpected central bank rate hikes or lowering of interest rates, or GDP data, right? Or jobs information, any type of economic information that comes out drastically different than what was anticipated. Those are all things that can have a significant immediate impact on price. What we saw last week with the talks and the actual implementation and us hitting every single, well, I can't say that with confidence, but us hitting a lot of tariffs with a lot of different countries, we saw the shift in the market immediately. You had pairs that moved 300 pips in 4 hours. You had pairs that moved 500 pips. You know, you had AUD USD. I think that thing moved like, or that was AUD CAD that moved like 437 pips. Normally those pairs don't move like that. We have not seen this type of action, price action, since March of 2020. So now let's talk about what it is that you should be looking out for as a trader. All right, so y'all remember this? Y'all know when this was, right? So I'm just going to go from, it was the end of February, excuse me, all the way down to, hold on, this was March 8th, right? So this was March 8th. So in, let's call it 14 days, we saw the market for USD JPY drop about 1,000 pips. So let's zoom out. We know what happened in March of 2020, right? We saw an instant rebound, and then we started to see price continue to trail to the downside. And then about a year later, we started to get stable and then move to the upside. But for the entire 2020, we saw the yen get stronger than the dollar. Now, what I do want to look at is I'm going to pull up USD CAD so we can take a look at what happened with that in March of 2020. And y'all got to forgive, I have my charts marked up, and so they may not be as easy to read. But let's go down and let's find 2020. March of 2020. So this is what we saw in March of 2020, right? So CAD was one of those riskier currencies, right? We mentioned that the Aussie dollar, the New Zealand dollar, Canadian dollar, and crypto were going to be those risk on currencies. So when things started changing, as far as y'all know what happened in 2020, we saw people pulling out their money from the Canadian dollar. And when we have that happen, the Canadian dollar becomes weaker, right? So as a result of a stronger base, so the USD being a safe haven currency and people pulling their money out of CAD, putting it into USD, you now have a situation where you have a strong base and a weak quote, and that sets you up for buys. So in a matter of, we're going to start off at March. This is March 1st. So in a matter of, this is, what date was this? March 15th. So in a matter of 14 days, we saw USD CAD move 1,300 pips to the upside, right? But if you know, okay, well, CAD is a riskier currency. People invest in CAD when they feel confident about what the market is doing and what's happening in the market. And so therefore, if we got this whole global thing going on, people are scared. They don't know what's happening. They're probably going to take their money out. So let me get set up for some buys. I'm taking every buy opportunity, right? And so that's what we saw happen in that short amount of time. There's another one that I want to take a look at as well. It's going to be, there's actually a couple I want to take a look at. So I want to look at AUD USD, and I'm going to pull up my chart. Not for the daily. We're going to go to the weekly. And we're going back to March of 2020. So we can see what happened in March of 2020. Now remember, USD is a safe haven currency. Safe haven currency. People are going to put their money into that when they are in risk off situations. When we have a global pandemic going on, they're going to pull their money out of everywhere else. They're going to put it in a dollar. So in March of 2020, we saw, in a matter of, let's see, that was March 1st to March 15th, 1,000 pips on AUD USD. AUD USD don't move like that, right? Them GBP pairs, yeah, they'll move like that, but AUD USD don't move like that. This is all due to those black swan events that we talked about, right? Global pandemic. Now, the other one that I wanted to look at was GBP JPY. And I'm going to pull up my weekly chart, and we're going to go back to not odd. We're going to go back to March of 2020. Here it is. So this is February 23rd. So we got March 1st right here. So we're going to start from this candle, because this is March 1st. Look at that. To March 15th. So those first 2 weeks, when we started getting reports, when things started looking a little wild, right? Look at that. 1,500 pips in a matter of 8 days. Kind of crazy. And I should say 15 days. I'm sorry. So these are the circumstances in which we see those huge moves in the market. So adding this on top of what you already do is going to make you that much better of a trader. So now, if you learned something new, let me know in the comments. If fundamentals are not as frightening as you thought they were before, give this video a thumbs up. And I want each and every one of you, even if it seems overwhelming right now, add sentiment analysis to your trading checklist, right? So we got the technicals down. Y'all can go through all the videos on this channel. It ain't nothing but technicals. We're going to evolve as traders. We're going to step it up as traders. The whole goal of us being in this space is to earn consistently. And in order to do that, we have to have an edge in the market to be able to confidently execute our trades. All right. So I appreciate you guys for watching this video. I hope that in some way it was helpful to you and that you learned something new. And I will not be gone for another 4 weeks. Your girl was just burnt out and tired. So I took a little break, but I will see you guys next week right here on this channel, and we'll be back on the charts. Have a wonderful, wonderful trading week and be safe, and let's go catch